Good morning. I probably should qualify that. I don't think Betfair's market cap is still 1.4 billion, but it will get back there. When we started Betfair, I remember someone giving me a great piece of advice, and he said to think about these kind of businesses. Would this idea have appealed, let's say, 50 years ago? Could you have done it 50 years ago? And if you couldn't, but you can do it now, what has changed? And it's a piece of advice that I think is incredibly sound. It actually applies to pretty much every successful tech business. But what it does do is suggest that actually when we're thinking about innovation, we should also look back as well as look forward. Now, I'm a big believer that actually what we want to do as a population hasn't necessarily changed much through the ages. What has changed is the way that we are able to do it. So if we take betting just for a start, I mean, I don't know, but I'm pretty sure that there would have been betting between individuals in the Colosseum a few thousand years ago. The first in-play market, if you like. I know for a fact that the first horse race betting in this country started on Newmarket Heath a few hundred years ago between individuals. That's how betting started. People wanted to bet together. That's the whole essence of a bet. But as more and more people wanted to get involved and as more and more people were in different places, so we had to insert some inefficiency into the market. And what we did was put these people in called bookmakers. They were able to effectively bridge the gap of logistics of connecting everyone together. Fast forward a couple of hundred years, and what Betfair did was say, hold on, technology suddenly enables us to do this without the bookmaker. We can connect all these people effectively in a room at the same time. We don't need to take the bookmaker. So we were able to take the bookmaker back out of the process. And we were able, therefore, to go back to the way that people wanted to bet in the first place. It's an innovative idea in the sense that it hadn't been done before, but actually this is the way that betting, in a way, started 200 years ago. And that's, I think, example, if you like, of this sort of democratisation. It's happening the world over in tech. I mean, the Royal Mail is another example. Why do we actually go and sit there and put letters into a box somewhere? We did it because the logistics weren't possible. Why do we have books and encyclopedias? It's a way of sitting there collecting information and distributing it. In many ways, the precursor to search. So if you now apply that to finance, again, as with any market, if you start with a blank piece of paper, and you say, right, I'm going to design this market from scratch. If you don't end up where you are today, then that market is ripe for disruption. And I think a lot of people, and we've already heard through the morning, of people talking about how this market is absolutely ripe for disruption. Because I think we're the best one in the world. If you took a blank piece of paper and you said, let's design a financial market, and even if you did this 5 years ago, 6 years ago, I don't think you would say this is the ideal way you do it. People have put banks in much the same way they inserted bookmakers into the equation. They put banks in to sit there and bridge this logistics between borrowers on the one hand, savers on the other. So I'm going to do two quick questions. Hands up, everyone has a bank account. That's a pretty easy one. Hands up, anyone who's lent to a business. See, I would argue that the people who got their hands up now are right, and everyone else who's got their hands down is wrong, because I will tell you that I think you've all lent to businesses. You just don't know how you've done it because you've done it through the banking system. That's what happens. You put your money in a bank, the bank takes it, and then they go and lend to business. So in fact, you've been lending to businesses ever since you've had a bank account. You've just had no control in the process. You've had no say in the process. And as I think we've demonstrated in the last few years, it hasn't always been done necessarily to your advantage. And what Funding Circle does in exactly the same way that Giles was talking about what Zopa does is sit there and allow people to do it directly. Now that's great in principle, and it's great in theory, but how do you actually get it going? And we saw with Betfair that when a market is really, really ripe for disruption, you reach that tipping point and that critical mass very, very quickly. In Betfair, we sat there and we knew within probably 3 or 4 weeks of launching this business that we had something that was going to work. With then a bit of challenge about whether we could make it work, but we absolutely knew that we could. And the reason being is that you have a virtuous circle. The more people that come in, the more efficient the market is. The more efficient the market is, the better it is, the more attractive it is, the more people come in. And it just sort of spirals nicely. And it's network economics, which is an incredibly powerful phenomenon. So there's no obvious way of doing this thing. You don't suddenly flick a switch and say, hey, presto. You have to tap into people's dissatisfaction with what's happening at the moment. So we are very lucky at the moment, I think, and again, Giles mentioned this, in terms of the whole sort of P2P finance at the moment. You have a perfect storm in a positive sense for this kind of business because you've got banks that don't want to lend to businesses, and I have some sympathy actually because it's not really efficient for them to lend down into all the sort of small SMEs. you've got savers who can't get a decent return on their money and are saying, what can I do? So we've got this perfect opportunity. Both savers and borrowers are dissatisfied with the existing situation. So you tap into that, and very quickly you get people talking about it. The more that people talk about it, the more that people try. The more they try, the more they like, and off you go. And I don't want to sort of talk too much about the funding circle business, but in terms of its growth, it's not as old as Zopa. It was founded 3 years ago. It's lent £120 million to businesses. 10% of that's come in the last month. So it is really, I think we're seeing this great acceleration. It's undoubtedly, in my mind, hit that sort of tipping point, if you like. Now, of course, with that growth come challenges. We've also seen a lot of things, from an investment point of view, the savers. We've done a lot of work to sit there and look at the people that lose money, the people that win money. The people that lose money are the people that don't think necessarily about it. They might put all their money into one investment. Well, let's be clear. I mean, some things don't change. There will be investments that go wrong. And I don't think any of us would disagree with that. What we've also found that as soon as you invest in more than 10 businesses, your rate goes up significantly. If you invest in 20 businesses, it goes up again significantly. If you invest in 50 businesses, it goes up again. So the whole portfolio effect, nothing is necessarily different. A lot of the theory from days gone by applies just as much today in the new world as it did in the past. There is just a more efficient way of doing it. And we've talked about taking branches out of the equation and therefore not having those overheads and effectively applying those to both borrowers and savers on both sides. And it works very well. Another interesting point, which is often, I think, overlooked, is what I call the sort of reverse economies of scale. As I said, you have all lent to businesses without necessarily understanding it. And there's that great old phrase that says, if you owe the bank £100, that's your problem. If you owe the bank £100,000, that's the bank's problem. And that's a very, very true statement. If you are a bank lending to a business and you're taking all that credit risk on your own, you clearly have to do an awful lot of due diligence relative to the size of the loan. If you're sitting there lending £100 to a business, will you do the same amount of due diligence that someone would do lending £100,000 or £1 million? Of course you wouldn't. So in actual fact, the more people you get involved in the system here, actually the economies of scale sort of work in reverse. The more people you get, the more efficient it is, and actually the lower the burden comes down. So one of the reasons that our borrowers like the process so much is because if they go to a bank, typically it takes them about 20 weeks from start to finish to get a loan, assuming they can get one in the first place. The average length on Funding Circle is about a week. We've had loans of £1 million filled in a couple of hours, so people are able to focus on what they really want to do, which is to run their business. So there's no rocket science. It is better for borrowers, it's better for savers, and if it's a better market, then clearly the world is going to evolve that way. Another business, again, that I'm involved in, and I'm not just doing a plug here, but I think it's interesting just how the world is all moving, is a business called Lmax. Now, Lmax is a business that we bought out of Betfair just before Christmas. It's designed to use the exchange technology but apply it in a different market. And the market we chose was foreign exchange. Now, foreign exchange is a vast market, trillions of dollars traded every day. And for the most part, it's actually a pretty efficient market. But it is not perfect. And for example, in the biggest capital market in the world, still today, when you do a trade, you basically have this thing called name giver. So I can make a price. There's my price. I'm good for it. Oh, sorry, it's you. No, I'm going to change my price. Now, the market's got used to that. It's been that way since it started, and people are generally quite happy. It was very interesting when Jeff showed that video of Steve Jobs, because when the iPad came out, a lot of people sat there and sort of said, look, it's nice, but do I really need it? Is it really going to make a difference? Then you get your hands on one. It's no surprise that I'm using mine for my notes now. Get your hands on one, and you actually sit there and think, wow, it's better. And in Lmax, we talk about the iPad effect, because what we're finding is that when people trade trade FX on a pure exchange, if there's a price on the screen, you hit it, you're done, no questions asked, they sit there and go, wow, 9 times out of 10, I don't need that, but that 1 time out of 10, when actually quality of execution is really important, that's really, that means it makes a big difference. And what we're seeing is that people, it's quite a sell to get people to sit there and say, look, actually there's a better way of doing FX that's been done this way for hundreds of years. A better way of doing it, when we've got them over the hump and they get their hands on it, in a virtual sense, they go, terrific, I love it. So I think all the way when these things, the way you build these networks is simply by executing better. The biggest advocates for any P2P network are the people who use it. Again, from a marketing point of view, the single most effective marketing campaign you will ever do in a P2P network is asking your customers to sit there and go and bring in more people, for them to be advocates of your business, because that's what it's all about. we are just sitting there providing a platform, a machine, if you like, but everyone who is participating are the people who are adding the real value. They're the people who are sitting there making the business and actually making it happen. In terms of where I think this goes, because I think it's always interesting to look in the future as well, there is no doubt in my mind that peer-to-peer funding, whether it's on the personal side, whether it's on the equity side, whether it's on the SME side, is absolutely here to stay. You can't uninvent these kind of things. It's a better way for doing it. We're not going to put the banks out of business. Let's not be silly. But it is absolutely established. It's here for good. It's the same way that the Betfair model wasn't going to put bookmakers out of business, but it's here for good. And if we turn them all off today, somebody else will step into that breach. What is interesting is that certainly in this country, I think we are a long way ahead. I mean, the funding circle model actually really is only really working at the moment in this country, which can't be sustainable. It has to work everywhere. And wherever there is a demand for capital from borrowers and a demand for return from savers, then people are going to gravitate to this model. So the challenge for us, candidly, is making sure that we can execute that worldwide. I mean, the idea of boundaries in a global marketplace, I think, particularly in finance, particularly in a virtual commodity, which this is, in other words, you don't have to pick something up and move it, I think you have to be very wary. So execution there, I think, is an issue. Yes, I think the market will get regulated. I think that is right. We have to have, though, I think, appropriate regulation. Just to finish, I want to think about what other markets might be ripe. I've talked about betting, I've talked about finance, but just to leave a couple of thoughts in your mind about where I think this might go. And again, if you think about these adages, where have we inserted companies into the structure where actually we didn't need to do it? And I think insurance is absolutely ripe for disruption. I will be staggered if there isn't some form of P2P insurance market, in the future. Why do you need a big company to sit there and syndicate that risk? And I'll give you another example, going back to Betfair. When Betfair started, you couldn't bet during a game. I don't know how many of you bet here, but now most betting takes place during a game. The reason you couldn't do it was because one company had to sit there and take all of this risk and sit there and try and work out the risk calculations in real time. What Betfair did was effectively syndicate that risk to all its users. And the same thing I'm absolutely convinced will happen in the insurance market. Now, there's some standardization issues to think about how you term contracts and how you deal with fraud and those kind of things, but it has to happen. Why do I pay third-party car insurance when my car isn't being driven? I sit there and I sign up for a contract for a year. Why? Just because it's an inefficient market. It's the only way that people can do it. So I think insurance is absolutely right. Cash. I can't really see why we will need to use cash in a handful of years. I hardly ever personally take cash out of a cash bond machine now. I do it all virtually, whether it's with plastic, whether it's with accounts and those kind of things. So, again there, I wonder whether we will soon move to a very sort of, cashless economy. I'm going to leave you with one incredibly controversial one. Do we even need money? Go right back. Money was inserted into the system because it was an inefficient system and it was sitting there trying to bridge gaps. Actually, you could argue, and if you go back to the adage I started with, the way to look for innovation is to look back. If you go right back to the beginning, we were in a barter-led economy. And actually, money was just put in there to make it easier for people to make different equations. Someone, and I can't lay claim to thinking this one up, but someone sat there and said, okay, you're a clothes manufacturer. You need to buy cotton. The cotton farmer needs to buy machines. He buys those machines from a factory. Those factories need to have clothes. They have to have clothes for their workers. That's a slightly tenuous example, but you see where I'm going. You could actually replace all of those things with barter things. Now, the reason you couldn't do it in the past was because you couldn't have thousands and thousands of parallel rates, effectively barter rates for everything. In other words, cotton versus machines or cotton versus screens or whatever it is. Could you do that today? You could in theory, because we have the cloud, we have amazing processing power. What is to stop us having individual rates? Now, I'm not saying it's going to happen, but I absolutely believe that every single time you look back in history and you say, that was a market and we put people in, if you put people in because you were bridging logistical difficulties and inefficiencies, then exactly what technology has the potential to do and will do is to take those inefficiencies back out and put basically this hand and this hand together. Thank you.
And if you really want to show you're on trend, we've got collection jars for your money at the front door. You'll get some cotton. I'm going to ask you to do something that's quite painful sometimes for entrepreneurs, which is admit to things that didn't work. So on the funding circle journey, could you share some mistakes you made and how you fixed them?
I might dodge that one because I'm only a non-exec at Funding Circle, so I haven't really been involved in building the business. But no, I mean, I think whether it's Funding Circle or Betfair, when you experiment, you're not quite sure, you try things. As I say, you go back to the idea that the real value in any of these networks comes from all the people who participate in the network. And one of the things you try and do when you're building these is to, we make a big thing about taking the middleman out, because the middleman is the person who sets the rules, and we're saying, look, actually, we're going to take that person out and let you decide. And then, of course, every now and again, you take them out and then you put your own rules in place. And we did that at Betfair. I think Funding Circle have done that a couple of times. But the key, though, is you will make mistakes. You've got to iterate. You've got to sit there. And for your community, you should listen to them because they're very valuable. Interestingly, there's definitely a phenomenon with forums and chat rooms and things like that where people moan an awful lot more than they support, and they all tell you that they're your biggest customer, and then you go and match the biggest moaners to the biggest business people, and there's a complete zero correlation. Not quite zero, but...
So there's no experience where you changed strategy because you looked at the A/B feedback?
Oh, numerous. I mean, whether it's big strategic shifts or whether it's sort of evolution and iteration the whole time.
What sort of things surprised you?
I think, again, so a Funding Circle, we were quite, we started with quite small loan sizes, and we thought that's what we had to do to sort of keep liquidity focused. And then people were saying to us, look, please, we want bigger loans. We'll do, as soon as you do bigger loans. And we were a bit nervous about doing it. We opened it up to bigger loans, and woomph, different borrowers came in, new lenders filled it up very quickly. So I can't think of one where we went from there to there, but absolutely the whole time we're, meandering around in response to what people are saying. And I think what we have to do is to do that much more quickly. I mean, I'm a massive believer that you put stuff out there, pretty much in real time whether what you're doing is right or wrong, and you should respond accordingly.
And let's suddenly make you the regulator. You have this new power. We'll be hearing from a regulator later. What would you do to protect the consumer but make the marketplace more efficient?
I think you have to have transparency. You have to make sure that there is good access to information for everybody. You have to make sure that the operators themselves are totally bona fide. And again, I think all of us who are sort of at the forefront of this industry right now support regulation, because what we're worried about is the question you asked Jeff earlier, which is the cowboy that comes in and thinks this is a fast way to make money, because if someone does that, we'll all be affected. So, I think we want a sort of a sense of responsibility of the people who are operating it. You should regulate the operators, not the participants, because I think that's how you affect it. So the worst thing we could do would suddenly to sit there and say, somehow we have to regulate everyone in this room who wants to be a lender on any of these platforms, or even borrowers, because that would be unwieldy and it would sort of kill it.
Thank you for joining us, Ed.
Thank you.